Hello friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about POLYMEDICURE, whether it is a buy at current levels or an avoid. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about PolyMedicure, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions on a daily basis. Once you get the $10 membership, you will have access to my portfolio, my watch list, and a number of podcasts that I put up on stocks and markets. For detailed market or company talk, we can directly connect through email, and we can connect with a fee. You get access to a number of podcasts that I put up on short term calls as well, and the watch list is of around 25 stocks in which I put up stop losses and targets from time to time and gets updated every week. Now, about the company, PolyMedicure was established in 1995 and manufactures state of the art medical equipment. They also manufacture products for oncology, infusion therapy, urology, gastroenterology, etc. Market leader in this space, and the market cap of the company is around 5,500 crores. It has just run up a bit, so the market cap is around 7,000 crores at the moment. If you look at the financials, and these are December FY21 numbers, the financials were robust. Sales went up by around 10.5%. Profit went up by around 40% to around 35 crores versus 25 crores. Low debt, costs have come down appreciably. Decent promoter holding, low institutional holding. ROCE of 22%, operating profit margin is of 23%, which is quite robust. If you look at the performance, then stock is up 3x from the March lows and is around 650 at the moment, from around 200 levels, 220 levels. Numbers have been strong, and that's why the stock has been running up. It was consolidating for the past few weeks and then have shot up in the last few days. Return ratios are pretty decent, about 20%. Trading at around 30 to 35 times earnings is slightly expensive. It is slightly stretched, but still looking pretty good. Demand for products of this type seems to have increased post the pandemic, and numbers look like sustainable for at least the next couple of years, and that's why heavy buying is coming into the stock. So why I believe it is a buy on decline? It is in a unique space catering to major aspects of cure. So this is not a hospital. This is not a company that is providing drugs. This is a company that is providing the equipments to a number of, you can say, hospitals, etc. So this is a very good hospital ancillary play, healthcare ancillary play, and one needs to understand that this did not do well, say 4 or 5 years back, because of a high debt, because of a number of ramblings that went on in the corporates in this company. And now everything has been sorted out, and the company is doing pretty well on both the top line and the bottom line. It is a very good ancillary play for hospital and pharmaceuticals. Low debt and small base will help. So now they have started coming up with the profitability after a barren run. So there have been 6, 7, 8 years of no profits, and then for the last year, 2 years, the company has been showing profitability for the last 4, 6 quarters, and this is just begin. I believe that this is going to continue and going to further expand going forward. So the numbers look, at the moment the price of the stock looks stretched, but the numbers are coming in. Valuations are slightly stretched, so probably it has shot up. Very good levels were around 510, 500, 520 to buy, but wait for some days, wait for a couple of weeks, and the moving averages will catch up and the stock may consolidate, and that will be the time to probably grab onto the stock. If you look at the technicals, then slightly overbought, I would believe, and the way it has shot up in the last few days, it has already, I mean, gone up something like 25-30%. the way the stock has went up. So 660, 670 currently. Major supports is between the 560 levels, still 15% below the current market price, although the major moving average is around 510, 520. So after, probably it can move up a bit also from here, probably to 700, 750, but then wait for correction. Don't get onto the bus when it is running so fast. You would be in trouble of probably falling from it. Better to wait for consolidation even after a huge move. Wait for 10, 12 trading sessions of, I guess, no move, or at least slightly downward trajectory, and the stock falls a bit, and then you accumulate around the 20 to 50 DMA. That would be my suggestion. Corrections will be big buying opportunities, and wait for levels closer to 570, 560 to get into. Maybe 520 is not possible, but 560, 570 is very much possible. I still believe this could be a multi-bagger from this level. It can be 2 3x from here in years to come. The market cap of the company is very low for such a business. I won't be surprised if the company has a market cap closer to 15 to 20,000 crores going forward, maybe in some years time. I don't know when. So that is why this is a top class company to get into on major declines. So what needs to be done? In my opinion, buy on major declines and keep track of numbers. Have a good 3 to 5 year time frame and keep on accumulating. It can become a multi-bagger. It can be a 20,000 crore market cap company, 15 to 20,000 crores, and have between 5 to 10% holding in such companies. So this was my video on Polymedicure. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.